You join us in Kuwait. We are here at the offices of Ahli United Bank Kuwait with the bank's chief executive, Richard Groves. Richard, if I can begin with where the Ahli United bit comes from. AUB took a stake in the bank back in 2002, and in 2010, Ahli United Bank Kuwait switched from being a conventional institution to being Sharia compliant. What was behind that decision?
Well, back in the 1970s, Kuwait Finance House was established and had seen the growth of the Sharia-compliant Islamic banking in the country. And there was a trend in this market and regionally for demand for Islamic banking. The board at the time took a decision that this was where they wanted to see the growth of the bank. So it was a board-level decision, considered decision taken before 2010, and therefore, the well-planned execution of the move from conventional to Islamic was executed in 2010. And the previous name of the bank was Bank of Kuwait in the Middle East. And so the opportunity was taken with the conversion to Islamic Bank to change the name as well, in line with the Ahli United Bank group.
Okay, let's take a dive into the bank itself now. In October last year, Fitch Ratings gave you A+, but there's always a but in these things. Noted large impairment charges on the remaining value of non-Sharia compliant assets. How long is this likely to remain an issue?
It's all been dealt with. At the time we had an investment in a conventional subsidiary which we had to make a provision for, so that we dealt with all our outstanding conventional assets. So that's all behind us now. So we have no more provisioning to make in that line.
Okay, I'm wondering if my next question, based on the same report, is also out of date, but you were identified as being highly concentrated by sector, notably in domestic real estate. Would you describe that as a source of strength, or are you looking to diversify?
Well, it suits us as a Sharia compliant bank, and with asset-backed financing, and we can, for example, Ijara financing. So our book is exposed to the real estate here. We believe it's a well-balanced exposure, and we have collateral, a wide range of real estate collateral. So we do have a reasonable exposure to real estate, but we don't believe it's over-concentrated.
You're talking about financing there. Towards the end of 2016 in particular, you issued a $200 million sukuk. What was the aim behind the fundraising?
Well, at the time, a number of banks locally and regionally were going to the market to raise additional capital. So we went for an additional Tier 1 sukuk. It was highly successful. We raised $200 million, which was probably on the smaller side compared with a number of other banks here in Kuwait. We felt that suited our book. It suited our view of the next 2-3 years in terms of our expansion of our business and our capital requirements. So it's really for supporting our capital and our normal business growth.
Okay, let's look at the broader banking sector here in Kuwait. I'm going to cite Fitch again, not just about you now, but about the sector as a whole. Back in August, the agency noted, and I'm quoting, large asset liability mismatches remain among Kuwait's banks. Would you agree with that? And if you do, is it a cause for concern?
No, I wouldn't disagree with Fitch on that. I mean, normally banks do. The idea of borrowing short and lending long is something all banks do in any market. When you say there's a mismatch, there are instruments within the markets to actually support that. And if you look at your funding base, we've been here in Kuwait since 1941, so over 75 years. I wouldn't say that we still have depositors who were with us in 1941, but we have...
Yes, anybody who opened an account with the Imperial Bank of Persia is going to be a little bit old now.
Yes, exactly. But in terms of their behaviour, that you could consider their deposits sticky. And so you look at the behavioural analysis of your deposit book, and that has to match, obviously, your lending in the longer term. And that's the same for any bank. We're no different in that respect.
All right, well, looking at the Kuwaiti banking sector, what do you see as the key trends?
Look at the trends we're seeing. I mean, this is very much early in the season for banks declaring their 2017 financials, but from the early signs are it's one of sustained growth in the market. We've seen in 2016, 2017, not just in Kuwait but regionally as well, the impact of lower oil prices. But Kuwait itself has not really stopped. The government has not stopped investing in major projects, and that has the trickle-down effect into the bank. So I believe, all in all, the economy is strong, and that has been reflected in the banking community, which is a bellwether for the economy.
The banking community is a bellwether for the economy. You mentioned government spending there. You're saying it's continuing, and there was a cut down or a reduction in spending, was there not?
But not significantly, no, not with a significant impact. I mean, the government has been committed to some of the they call the mega projects, and that has been continuing.
Now, Ahli United Bank Kuwait is part of a larger international group. The clue's sort of in the name, but
yes.
Looking at the Kuwait financial sector itself, it is relatively small and interconnected. What are the opportunities for growth?
For Ahli United Bank?
For Ahli United Bank Kuwait and for the community at large?
We're very much focused here in Kuwait, because being part of a larger group where we have operations representation elsewhere in the region and in the UK, so the group takes care of that. So we're not going to be expanding outside.
You don't have international ambitions?
We don't, no.
There's no point.
That's absolutely right. So we're very much Kuwait focused. So you look at the government sector, you look at the pharmaceutical, healthcare, obviously oil and gas is traditional. But on the retail side, we see very much an area for retail expansion. Traditionally, we've been seen as very much a corporate bank, but our footprint is fairly sizable, and the retail business carries the brand, and therefore it's important to have a retail presence in a market where you have many young people coming through into work, into business, and looking to support them going forward. So we see the retail sector as having a momentum going into 2018 and 19.
You say you see the retail sector having momentum. What are you doing to make sure that is sustained? What are the, insofar as you can tell me,
yes,
what are the plans the bank has to sustain that, to build on it?
Well, I would say it's much more focused than we've had it in recent years. In terms of, if you look at our marketing program, so basically our products are similar. You have a savings account, you have a current account, you can have a loan, you have a mortgage or an ijara, buy property. Those are similar, but you can tweak those in different ways, and how you present them to the market. Again, how you present the brand. So in terms of our marketing campaign is much stronger. We've been slow to market in terms of social media for very good reasons. I mean, today we find social media is coming under all sorts of attack for the influence it has on people's lives. But we believe that we have a considered approach to use of social media to reach out to perhaps a customer base which has not seen us as their natural fit. So there are a number of things we can do on product, but also on branding, which will help us grow our business.
You talk about the fit of the customer base there. What's the competition? Do you think you compete only against Islamic institutions, or do you compete against conventional institutions as well? How do you view the marketplace you sit in that way? Do you segment between the two, or do you think that it's all competition?
Well, definitely there will be those who want to choose Islamic banking, Sharia compliant banking, because that's very much what they want. There are those perhaps who will never want to use it, but in between there are the majority of our customers or potential customers who will choose a bank based on its products and services. So that means really the customer base is quite wide, but the competition is with both conventional and with other Islamic banks.
So, what are you doing to address that competition in terms of the product set? How do you see Islamic finance products evolving in the future?
Well, they will evolve with, one, it's by customer demand, and two, by looking at the different ways that we can present ourselves. I mean, there are the traditional Sharia compliant products which are not changing rapidly, but recently we introduced profit rate swaps, the equivalent of interest rate swaps, and we were first to market in Kuwait on those. So we are looking at ways of improving our product in a Sharia compliant way. So it's a matter again of really taking the existing structure and tweaking them in a Sharia way so we can present those to our client base and make them attractive, whether it be in delivery or in pricing or in some other form which makes it an attractive product.
That's the key, is what makes it attractive, because banking products are generic. In that sense, it's almost a commodity business. What would differentiate, I'm assuming, your bank from any other bank is efficiency, speed, quality of service.
Absolutely. The service is the differentiator. I mean, increasingly now we see change in banking. I mean, I've been in banking now for 40 years, so you're seeing the accelerated change, almost as long as AUB. But you see the accelerated change, the fact that there are very new ways of doing things which weren't around 5, 10 years ago, and the ability to people or customers to adapt to a technology and their hunger for new technology. So the whole payment system is going to go under very rapid change. So your ability to, as a bank, whether it be conventional or Islamic, to move with that will be a key differentiator. Kuwait, as I've said, is not necessarily at the leading edge of fintech, but I think it will be very much a fast follower, because we see in the people, the youth today, a hunger for technology, and they like to see banks having that latest technology.
Well, the bottom line, and this is something that's come up in a number of discussions I've had with people, the bottom line is this: if I shop online at Amazon or Apple, I can do so 24/7. I can do it on a multiplicity of devices. I can start a transaction on one device and finish it on another. And I'm going to expect that kind of service from my bank as well. And it doesn't matter whether I'm an expat or a national in any of the countries of the region. That's what I'm going to expect. That's what banks in the region have got to deliver. It's been said to me, and you've hinted at this yourself, that banking is going to change fundamentally more in the next 10 years than it has in the last 100. But I would add to that a lot of those changes the customer won't necessarily see, because they're going to be back office changes, they're going to be internal changes within the bank, which are going to have to be made to meet customer demand and customer expectations of service levels.
No, I would agree totally, but the flip side is the onset of cybercrime. And the fact is that it's incumbent on banks to ensure that their customers' business is safe, whatever channel they use, that we can ensure that the whole banking community, can ensure that we're not putting the customers' deposits, their wealth at risk. And that is a major challenge for banks, as we've seen in the last couple of years, where there have been very well publicized data leakage or hacking into banks with some loss. So it is incumbent upon the banking community to address this, and I think there are obviously steps being made, but we have to assure customers, as we've done throughout the start of banking, that your money is safe with us.
Yes, I should be very peeved if you lost it for me. That would kind of defeat the object of putting my money into a bank in the first place. Exactly. Bearing the issue of security in mind as something that's always got to be there, what are the opportunities for new product areas for the bank, whether it's retail, private banking, SME, corporate banking, etc.? Where are the great opportunities for you, and how will technological change affect that?
Well, I think you touched on part of the technological change, which will be the back office process. I mean, if we can make that more efficient, it means the front end with the customer, again, whether it be a face-to-face meeting or can be done digitally, will be much improved. So I think that is one area which we will be addressing as we go forward. Again, as I mentioned before, about corporate banking is key to us in terms of our total business. Again, I don't see a demand necessarily from corporates for specific products, but again, it's the B2B side of business, digital side of business, where we see opportunities coming this year into next year. I think retail I've covered to a certain extent. Private is really private banking. Obviously in Kuwait, like other Gulf countries, there's been huge amounts of wealth created over the years. Much of that wealth has been put into real estate, not only locally but also overseas. So we help manage our private banking clients' wealth both locally, regionally and internationally. And I think there's definitely further room for growth there.
Okay, so far we've talked a lot in terms of opportunity, what the opportunities are for the bank going forward. Challenges, you've highlighted one already in terms of cybercrime. Are there any other issues you see looking forward where you think we've got to skirt around this, or we've got to get this absolutely 100% right?
Yes, I mean, I'd say in terms of delivery of our products and services to our customers, there's an expectation that we provide a 24/7 service, either through ATMs, through mobile internet banking, or through call centres as well. And if at any reason that delivery is impaired, then obviously it leads to customer dissatisfaction. Increasingly, regulators are looking for banks to ensure that they can run 24/7, and if not, why not? And we've seen it in the UK, we've seen the US, where banks actually get fined by regulators for not being able to address a downside risk of delivery. And I think that's something which we will spread. So that for us is very much sort of top of mind. But looking at the competitive landscape, yes, we see other banks which are sometimes ahead of us in technology, and customers there asking, why haven't you got an iWatch compatible mobile banking system? Or some of our staff will ask us, why haven't we got it? But in terms of...
You have staff who are running around wearing iWatches, you're paying them to.
Possibly, yes. But it's that, I say, it's still in that technology space in terms of the delivery is, it is ever present and it's challenging.
If that is challenging, it comes down to what drives business value, what drives profits. Customer experience, whether it's a retail customer or a corporate customer, it's down to the customer experience, because they're the people you've got to keep hold of, they're the people you've got to engage, they're the people of whose wallets you have to increase your share of. So that's got to be the key issue, surely.
Of course, yes, the customer experience, whether it be at, say, corporate, private or retail or treasury clients, absolutely. I mean, we wouldn't be in business if we didn't have clients, and hopefully satisfied clients as well. So it is absolutely, and take away all the technology, take away all the products, from that. It's really the customer service which is incredibly important. And today, it's as much a differentiator as it ever has been. And the ability of customers to move their bank accounts, to be more aware of what is out there in the market. It's not just parents sending their children to bank with this because grandparents did. We're up against it, and it is very much a competitive landscape.
Well, finally, there is an issue I need to address, which you may not wish to comment on, but I have to address it anyway. It was reported last year that the bank was in merger discussions with Kuwait Finance House. Is there anything you can tell us about this particular issue?
Well, there was a rumour. I never comment on rumours, but there were a number of disclosures made at the stock exchange. And really, other than what has been disclosed and in the public domain, I really have nothing to add, Robin. So I'm sorry, I can't give you any more information on that.
Richard Groves, thank you very much indeed.
Thank you.